Nvidia will reach $250 per share in the summer of 2025, and in this video I will explain you the full outlook and analysis how we get there. So make sure to subscribe. My name is Danny. If you don't know me, I am the YouTuber, the most watched stock market YouTuber from the Middle East. I discovered and talked about a lot when Tesla was an $18 stock. Now it's a $400 stock. So I look for growth stocks that absolutely explode, and I think Nvidia is one of the next big exploding stocks. So make sure to not buy anything before watching the whole video, and let's dive into it. So the first thing that I want to show you guys is the PE ratio. The PE ratio is the price to earnings ratio. I love this ratio because it's mostly used by investors to see on the very first glimpse if a stock is overvalued or undervalued or just in the middle, and you can look into the history. And this is what we're having a look right now. So you see, for example, Nvidia's PE ratio is around the 50s, okay? As of this recording on this video is 54. Now, if you think like, well, that's kind of okay or normal, and I agree. Like that's, we have seen like crazy PE ratios when companies are having a lot of momentum and crazy hype, and maybe the money is flowing the markets and we are in a crazy bull run. Then we can even see PE ratios for thousands. Right? I remember like Tesla had once a PE ratio of thousands, but this is usually when the earnings of the company is very low and they're just getting started to getting revenue of a product, and the price is very high because of the hype of this new product, right? Well, this is not the case anymore for Nvidia, but hear me out. In the summer of last year, 2023, the PE ratio reached 250, and this was one of the highest ones. And since then, we went a little bit down, and we are somewhere balancing between 30 and 40 to like 80s, okay? So with 50s, we are right in the middle. So with the next push, currently, as you know, since the earnings, Nvidia lost about 10%. But this is just the one thing. The second thing that I wanted to talk about is the PEG ratio. The PEG ratio is essentially the same ratio, but considering also the growth. This is something that is a little bit more sophisticated because you're also considering, wow, they are having this high PE ratio, well, because the growth is so high, okay? So here you can see we have a PE ratio of 167, which is also kind of the lower end because we were as low as 0.38, but this was like back in the days where Nvidia, had barely any growth, a usual growth of 30 to 50. But nowadays they are growing, over 100 and 200% in revenue per year, or 30 to 15% per quarter over quarter, which is absolutely insane because everyone wants to have the chips. I think that this is very important to understand. And the maximum that they had was 7, okay, which was a little bit more expensive. But here you can see that we are also in the PEG ratio a little bit of undervalued, or let's take another word, underappreciated, okay? And now I would love to show you an interview, which is a couple of days ago, but I think it's super clear by the CEO of Nvidia, Juan Jensen, who explains a couple of things. First, demand. Second, the black whale overheat issues. Third, pricing and overall sentiment of the chips and how he recommends his clients to buy his chips actually.
Jensen, great to have you on the show. Thanks so much for joining us.
Nice to see you, Liz. It's great to be here.
Great to have you. The superlatives used to describe not just your earnings, but your outlook range from, I was writing these down, full steam, full throttle, incredible. But the headline really emerges that you guys have a problem most CEOs would love to have. Demand for 2 of your products, right? Both your Hopper chip and the orders for your new Blackwell chip far exceed the supply you have. What's the most important step you guys are taking to speed up the process to fill these orders?
Well, first of all, I appreciate that. Hopper and Blackwell are two just magnificent computing systems. And what they've done is these two computing systems has really reinvented computing altogether. From software that was written by humans running on CPUs to now machine learning, creating these neural networks that make possible artificial intelligence running on our GPUs. And so as the world modernizes, the data centers $1 trillion of data centers around the world, the demand is just incredible. And so we're ramping both of these platforms incredibly hard. We had a record quarter this last quarter. We got it to a record quarter next quarter. We're going to go from $0 billion of Blackwell to many billions of dollars of Blackwell. And so it's going to be an incredible thing, but the demand is just incredible.
Yeah. I'm so interested to know some numbers. How big is the backlog for, I guess, both the Hopper and the Blackwell system, the successor that a lot of people want to see? Are you seeing any customer behavior, Jensen, that says, you know what, we're going to wait for the newer Blackwell model?
Well, people are modernizing their data centers, and so they just need to get going. And what I advise people to do is that, and they are doing that, which is we're going to create new systems every single year. Buy what you need that year. There'll be something new that you can buy next year, and then you'll just cost average your way through. The reason why it's cost averaging is if we increase the performance every single year, effectively you're reducing your cost for any amount of computation that you want. Instead of the classical old data centers, we're going to, several $100 billion of capex each year will go into these machine learning based and AI based systems. And so we have hundreds of billions of dollars of IT systems that we're going to have to go build over the next several years.
I think the number's been put out there for all these companies, whether they are tech or just basic enterprise, ramping up and spending on AI is something like $350 billion. But let me tackle the hyperscalers first, meaning the 800-pound gorillas in the AI space who are desperate for your chips. Meta, Google, Microsoft, SoftBank. I would love to know how orders are filled, meaning who gets preference? I mean, does it go by who ordered first or by the size of the customer?
Well, if you don't place an order, it's hard for us to fulfill it, and so most of them have placed orders. We try to be fair with everyone so that they can all get their AI infrastructure up and running. We also make sure that their infrastructure is ready, and so between us and them, there's no sense shipping computers if the data center and the power and the readiness of the system is not there. And so we work very, very closely with all of our hyperscalers. We've been planning for this for some time. And I think at this point, everybody has stood up their AI infrastructure, the Grace Blackwell systems. I think OCI has shown pictures of it. Google has shown pictures of it. Dell and CoreWeave just showed a picture. I think it was last night. And Satya at his conference announced that they're going to have previews for their customers here pretty soon, and they've got their system up and running. And so everybody's really proud of the systems they've stood up, and we're all just racing to get there.
Yeah, and we're talking about hundreds of thousands of these, and people are dying to get their hands on them. Can I just get some clarity on the question about the overheating? This report over the weekend, there was in the information this report that said that some of these were overheating. Can you just tell me if that was an issue? If it's true, was it an issue basically with the Blackwell chip design, a rack problem, or was it simply that the data centers were not built to the right specs?
It's a non thing. It's probably somebody who heard somebody doing engineering, integrating our systems into their data centers. In the beginning, there are all kinds of engineering issues, but these are normal things. We're just doing engineering. We know that the Grace Blackwell systems work, and we know that all of the technology now works because we now demonstrated 4 of them standing up. We have lots of them working at our company. We have lots of them working within our customers' companies, and so we're very confident, and we're in good shape with Grace Blackwell production ramp. But it's still, we have thousands of engineers doing all kinds of things. So I'm not sure what they heard, but it's a non-thing.
Well, it's a long way from 32 years ago when you founded the company with just a few employees and a dream. And as you begin to really see this come to incredible fruition, at least when it comes to generative AI, I'm so interested to know about pricing. How do you view pricing? Because if you're having trouble, because you did say into few quarters for fiscal year 2026 that you would see some issues with filling these orders, how can you keep the price the same, and will it rise?
We always do pricing based on the value delivered. And so we're very rigorous with respect to the simulation of these AI factories. In a lot of ways, the way to think about this, Liz, is here's this machinery, this big, huge machinery, and you apply energy to it. And what comes out of it is AI. We call it generative AI. In a lot of ways, it's kind of like generating electricity in the last industrial revolution. And there are all these machinery, these large machinery called AC generators, and they produce electricity. We're now producing this miracle called artificial intelligence.
You said that you're transforming, and AI is transforming every industry, every company out there, all around the world. And we see that. We definitely see that. But you have some of the loudest voices now in Silicon Valley. I'm thinking Mark Andreessen, the venture capitalist from Andreessen Horowitz, saying AI has hit a wall, it's plateaued, it can't go further right now. And he named 2 reasons. He said due to both the lack of enough GPUs and then the training data. It's almost like he was pointing the finger at Nvidia that you guys aren't getting these out quickly enough. What do you say to that?
Well, our demand is greater than our supply, and so we need to get more out. And so we work with thousands of startup companies, and they're called AI native companies. From the ground up, they're built to be an AI company. From the ground up, this is a company that would develop capabilities and new products and services that are made possible because of AI. And we're working with thousands of them, and it's hard to at this moment keep capacity and infrastructure available for every one of them. And so we're working super hard to get there as fast as we can, which is the reason why we're ramping Blackwell so hard. With respect to AI, there's a fair amount of discussion about scaling laws, and the scaling law basically says the larger the model, the more data that you train it with, and the more computing therefore you need, the more effective the AI becomes. And so that's we're kind of on our back foot with respect to the amount of demand that's out there, but we're running as fast as we can to get the supply out there.
Well, it feels like you're not on your back foot, that you are standing pretty tall and holding ground, because you are able to just crush it on earnings, and your outlook is pretty impressive too. You talked about growing customer bases in India, and obviously you will have a situation where you have to hold back on China depending on what the regulations are here in the United States. But I'm interested to know if you're hearing from the Middle East. They have had some real ambitions here.
Listen, in just about every single country, and it's sensible, they now realize that their nation's data, their language, whatever their language happens to be, their language, their digital language encodes their nation and their people's knowledge, history, and culture. And they now realize that they have to take that digital data and turn it into their nation's intelligence. And that they can't wait for someone else to come do it for them, but they have to do it themselves. The success that we've enjoyed is largely in the United States, but over time, and very quickly, whether it's in the West or in the East, we're going to see just about every single country jumping onto this AI revolution, this age of AI.
As we finish up, what do you say to people who are very concerned about this? You hear them, and they believe that AI is going to turn us into digital slaves, and that the machines will rise and control all of us. You've had these discussions before. What's your gut reaction to that?
AI can do a lot of our tasks, but they can't do 100% of our jobs. That's the big idea. The idea that AI would somehow do 100% of somebody's job is very, very unlikely, and quite frankly impractical for any time in the horizon. What is very likely is that AI will do 20, 30, 40% of 100% of the jobs in the world. So what that means is that AI is going to revolutionize and transform everybody's jobs. And it's really important that everybody should learn how to use AI. They're not going to lose their jobs to AI. They're going to lose their jobs, if it happens, they're going to lose their jobs to someone who uses AI. And so that's the most practical way of thinking about it. And for the foreseeable future, that's absolutely going to be true. And I jump on AI. I would encourage everybody to use it. And if you haven't had a chance to use ChatGPT, use Perplexity, use Gemini. These are incredible. Use Claude. These are incredible AIs. I use that every single day.
Yes, I would imagine you do. Just don't replace newscasters and journalists, please, Jensen.
You're in great shape. You're in great shape, Liz. We need you.
Thank you very much.
So let's talk about those points, right? So demand is much, much bigger than supply could ever be currently, right? And they are increasing their production suppliers in Taiwan with TSMC, which is one of the biggest producers of the chips. And actually, they doubled the capacity, and Nvidia already secured 60% of this new capacity. So they're growing, and they're essentially selling hot dogs to drunken and hungry people in front of the baseball stadium. Okay, this is how you can imagine selling chips to the big companies. First of all, we are only selling to big companies so far. So no big governments, not big, maybe other type of companies that might work in the finance space or engineering space or whatsoever. So most of the selling goes to Meta, XAI, they go to Google, Amazon, right? Those companies that using it for a product, like for example, the OpenAI's ChatGPT. But I also want to say that the crazy thing about that is everybody is very emotional. Everybody wants to have the newest chip by Nvidia. Jensen need to balance who to give the chips to, like Elon Musk is calling. We need 20,000 chips, right? Then he has only 10,000. So how he will split up between Zuckerberg, Elon Musk, and Microsoft and Amazon, right? It's a very, very interesting position to be in. And the second thing that I saw is that he actually, even that he don't actually doubles or triples the pricing yet. He says we want to increase it according to the output that the companies can make, right? So as the company can maybe be more profitable with those products like ChatGPT, or maybe they, discover new medicine and can sell this, or what's it? The opportunities are endless. I think that is the point where Nvidia will increase the pricing as well, and that will directly affect the revenue that can take another push higher. Then he said something about the overheating issue. Okay, so Blackwell is not overheating. It's a nothing burger. Okay, forget about it. So this caused at least 5 to 10% decline in Nvidia stock right now. So the confirmation that it's nothing is actually another driver for 10% up in an Nvidia stock. So as you can see, a lot of these things add up, but there's kind of a way of seeing how Nvidia can go up to this high PE ratios, and why I think this will happen in the first half of 2025. Because if you're looking into the product cycle and product calendar, okay, you see that the Hopper, the main chip that they sold last year that increased Nvidia to this crazy PE ratio of 250, was when Hopper was introduced in March, then it was in full production in September, and then actually they are fully reported that they sold over 500,000 of H100s, which is the Hopper, in the third quarter. Remember, the third quarter is the quarter where they report what they sold in the second quarter of the year. So the end of the first half of that year. Now they're releasing a chip every year, which means that look at the calendar, it looks the same. 2024 March, they introduced Blackwell. Now by September, also mentioned in the earnings call, they are starting the production already, right? So they're in full production of Blackwell. And then they have the delivery, and until they delivered 500 or even 1 million of Blackwells in the first half of next year, 2025, I think with this crazy numbers, and also the Hopper still selling like crazy. Like, this is the crazy part about Nvidia. The earnings said that the new product is up and running and this has crazy demand, but usually the second product slowly starts to decline. This didn't happen. This didn't happen. This is so crazy about Nvidia. This didn't happen. So actually, they kept on selling the Hopper and the Hopper, like it's crazy. Like, they can sell much more. And if you think the numbers that they are selling is absolutely insane. So let's dive into the last part of this video where I explain where I saw something similar as well. So just to summarize that, we will see the full delivery and the peak of Blackwell selling. So not only Hopper, but Blackwell in the first 2 quarters of 2025. With that, you will see that we actually will have a run on Nvidia again, I believe. This is what I believe, where we see the PE ratio going also again higher. I don't believe we can go to 250 again, because that was a crazy run. But even when we just go to 150 and they just keep on delivering on the earnings, which means that the stock shouldn't go down, then you would be at the price that it would be triple as high as it is now. And let's say it's now 150, just to make it simple to calculate. Actually, I think like $450 is in the potential of Nvidia stock in the first half of 2025. Now let's dive into where I saw this craziness before and why I'm thinking that we're just getting to the start of Nvidia. So all of that reminds me of Apple, and specifically Apple 2009, when they released iPhone 3GS, because the iPhone 3GS was the third generation. There was clear vision that the iPhone is the next big thing for Apple. And even Apple had a crazy run, as you can see here, from the early 2005 till 2009 of like 1000%, right? But then the iPhone just kept going, new generation, same like the Nvidia comes out with a new generation. So just that the Apple sold to billions of people over a decade, Nvidia is selling billions worth for tens of 20 and 30s of companies. So I think there is a similarity, and we all know what happened for Apple stock. Apple stock gained 5,000% from around $7. Let's say $7 because the iPhone 3GS was released about June 2009. So let's say $7 to now about $237, right? So crazy increase. Who would have known? Well, this is the spots that you are looking at, the patterns. You see something and then you're saying like, I saw something like this before, and then you just buy it, hold it, and you will be very happy. If you like this videos, make sure to subscribe and like. If you are looking to trade with me and receive all my trades, day trades that I'm doing with my group, then we have a software, the autopilot, that automatically copies all the trades into your broker. Check out the link into the description, and see you the next time.